So before I start this video on where interest rates are likely to head, a couple of bits of admin. Firstly, apologies for my voice. I've got a cold. Andy will cut out all my coughing and spluttering, so it will be a very succinct, tight video. As ever, if you like this video, you found it useful in any way, then make sure you hit that like button and you subscribe to our channel. Now, as ever, I always update these videos regularly, so there'll probably be another video as soon as there's a change in the market prediction of rates and where they will go. And of course, if you're watching this video embedded in the article on the Money to Message website, you can always read the article around the outside because that is always updated almost weekly with the latest predictions. So if you are watching this on YouTube, then click on the link in the comments below and you'll go straight to that post where you can get the latest information on where the Bank of England base rate is heading and where mortgage rates are going. So the Bank of England increased the base rate in September 2022 by 0.5% to 2.25%, which is the highest level in almost 14 years. And it was the seventh consecutive increase by the Bank of England, which is unprecedented. Now, what does that mean for mortgage borrowers? Well, if you're on a fixed rate deal, then your mortgage repayments will stay the same for now. But of course, when you come to remortgage, you can expect to pay much higher rates of interest on your mortgage. But if you're on a variable rate mortgage or a tracker mortgage, then you're likely to see your mortgage rate go up by a similar amount, 0.5%, as the increase we saw in the base rate. So that means for every £100,000 that you've borrowed in a mortgage, then you're likely to see your repayment go up by £26 a month. So if you do the maths, that means that if you have a £200,000 mortgage that's outstanding, then your mortgage repayment is likely to go up by £52 a month as a result of this latest Bank of England base rate increase. So what is going to happen to the base rate going forward? Well, a lot depends on, firstly, inflation. So when inflation is proving sticky, the Bank of England will increase the base rate to try and quell inflation. But also it very much depends on what's going to happen with our chancellor, as we've seen in the last couple of weeks, and what the government's plans are in terms of its pro-growth agenda and, of course, the fallout from its recent mini budget. Now, market predictions, I have to say, aren't always that reliable when you look at their past record. And for example, in August and September, they thought the base rate would go up by 0.25%, but as we now know, the Bank of England increased them by 0.5%. So the predictions are seldom right, but they are like a weather map. They do give you an indication of what might happen in the future. Now, this is what is important. Recently, the market had been pricing in that the Bank of England base rate would get to 3% by the end of this year, that's 2022, and be around 4.5% by next summer. Well, this has been rocketing. Things are moving very fast. So we're likely to hit 4% by the end of 2022 and 5.5% by the summer of 2023, which means the best 2-year fixed rate deals are likely to be around 6.5% this time next year. That's an enormous increase if it happens. And the reason why these rates are being ratcheted up, the predictions, I should say, are ratcheted up, is because of what's happening in Westminster, and in particular with the recent mini budget. So mortgage deals are being pulled all the time. Now, if you are coming to the end of a fixed rate mortgage deal, or you're just thinking of fixing your mortgage because you've been on a tracker mortgage, for example, then you may need to act fast because, as I say, those deals are being pulled all the time. The best course of action, if you're on a tracker mortgage, speak to a mortgage broker, whole of market mortgage broker, as soon as possible. If you're on a fixed rate deal, then diarise to speak to one at least 6 months before you get to the end of that deal, because 6 months out, you then have options to be able to lock in to some rates that may disappear if you leave it to the very end of your fixed rate deal. And I've had a lot of feedback from people who have followed that advice and are that much better off, particularly in light of what we've seen in recent weeks with that ratcheting up of interest rate predictions. And on top of that, the best mortgage rates have been rocketing. Now, if you don't know a mortgage broker that you can trust, then make sure you click on the link in the notes of this video. If you're watching this video within the articles on the Money to Message website, then you will find links on page to services that can help you find reputable mortgage brokers that can search the whole of the market. Now, I know what I've said in this video may scare some people, but you do need to act now. If you aren't within 6 months of your mortgage deal ending, then you might want to start to build a cash buffer and ensure that you get your credit score, your credit report in order. So when you come to actually apply for a new mortgage, once you've got advice, then you are likely to get the best rates. Now, if you found this useful in any way, please make sure you hit that like button and subscribe to our YouTube channel. And as I mentioned at the start, I will be updating these videos regularly. If you've got any questions, then make sure you stick them in the comment section below and I will answer them.